what we have on J signal, let's get right into it. I'm going to show you this, and I'll show you a whole day's activity on the Russell yesterday to show you how there was 4 back-to-back huge trades on the market. Is what we do is we have a couple of things that we like to do on the J signal. The J signal is a ninja program-based system, and it's really an algorithm that's based upon just 2 things: market profile and Fibonacci, like I was saying. The dots are Fibonacci based, red dots and blue dots. We don't, if you're in an uptrend, we don't care about the red dots. We only care about the blue dots on retracements. So what we like to do is we like to look at retracements. That's it. Okay? Nice job, Mike, yesterday on the EMD. Yeah, there's an explosive setup on the EMD and the Russell on the J signal. So, but the methodology behind the J signal is buying retracements with overall pullbacks. So the red dots are Fibonacci based, the blue dots are Fibonacci based, the yellow dots that fire up are divergence based. And what we like to see, if you see where that blue arrow is, that's an exact entry buy this morning. We're getting one off of the previous high a day right now again also. But that is a Fibonacci based retracement pullback, a blue dot with the yellow dot in the middle, confirming that there was divergence on the pullback. What's neat about this trade is it's one of my proprietary setups. This is high value area that works on your own ninja charts. Okay. The red is high value area. It's a value area, high value. The green is low value area. One of my proprietary setups is if we break out a high value area, you retest high value area, you look for a continuation to the upside, what's called a number 3 trade. And if you have J signal, you just need to trade one trade setup, and that's a number 3 trade, because that typically will be around 70 to 80% of your trades. Just one setup on all markets. And I'll show you how that works on the Russell and all the other markets in a second. So that's a number 3 setup. Now how you're going to do it is this. I got a couple things that are neat on the J signal, since some of you are new to this. I've got a 5-minute moving average built into the J signal. You'll see these green and this magenta line right here. You'll see it cross over right there. That's a simple 20 and a simple 50. And what we like to do is we like to go with trend pullbacks with overall trend, meaning retracement pullbacks with overall 5-minute trend. If you see the 20 crosses the 50, when you see that, I have an automatic setup that says buy black, meaning buy the retracement to the black or buy the retracement to the first test of market profile if it just broke out of it. This is a hardcore rule that we have in the room. So if I break out a high value area, I'm in a very bullish stage. This tells me I'm in the most bullish stage of the market. Whoops. This tells me I'm in the most bullish stage of the market anywhere above HVA. I'm very, very bullish. I'm above high value. If I broke below low value, I'd be very bearish. So I got 2 trend filters really. I got market profile by itself, which is a value area high and a value area low. If I get outside of high value, I look for one simple pattern. It's called a number 3 pattern or an ABC long. I let the market break out above HVA, get away from it, let it retest high value or black line, and then look for a blue dot with a yellow dot in the middle to go long. So this is an ABC pattern. You'll see hundreds and hundreds and hundreds of trades like this on J signal on all markets, right across the board. This just doesn't work on gold and crude. It works on all of them. So what we do, we broke out. We have a triangle trend change. First of all, let's go over this. This blue triangle tells me the trend is trending up. That's a trend change. That's one trend filter. Another trend filter right there, the 5-minute, says we're crossed up, telling you we're moving higher. The other trend filter, obviously, we broke through market profile. Market profile trumps everything because that's order flow. That's where order flow is. It's been working nearly 30 plus years, continues to work on order flow. So not only do you have the blue triangle that told me I'm in an uptrend, I'm looking for a buy retracement. I'm above market profile HVA. I'm looking for a breakout retest of HVA or the black line. And then I'm looking for a 5-minute trend filter. I had 3 things going for me on that trade. So when it finally retraces, it can either stop right here at HVA, give me a blue Fibonacci dot with a yellow dot in the middle called a bullseye trade. That confirms divergence to get long. Once it gets long, your target's going to be these symmetry dots. I have symmetry dots that are not lagging. They tell you where to sell. There's your first red dot to bail 50% of your position. Your 75% of your position can be bailed at 1275.40. You can front run it by 2 ticks. So you can have an order in from your second position at 1275.20. All right. Your stop is going to be this black line. We have limited risk on these trades. Sometimes what will happen is you'll see these markets stop right exactly to the exact black line with the overall trend and rebound. That happens quite a bit. I'll show you how that works in a second. But the overall gist of things is if you get a blue triangle, you look to buy black or market profile if it just broke out of it. If I get a red triangle and I broke through LVA, I look to sell LVA or sell black. Either way, with a blue or red dot, with a overall Fibonacci dot, with a divergence dot in the middle. It's called a number 3 trade. Now, if you look, I want to show you, I'm going to put the Russell over top of it just to show you how cool this is. It's a very neat setup. Now, I skinnied the Ninja charts down, so it's very hard for you to see overall price action. So if you have the Ninja Trader by itself, J signal, I would just get some 24-inch monitors or 22-inch monitors, whatever you want, 23. They're very cheap. They're about $1.80, $1.70. And I'll blow J signal up like this so you can see really good price action. This really tells you price action really nice and easy. You can see price action very easy just having the one chart up on J signal like that. Okay? So let me skinny that back down, but that's a good way to do it, how I have it on my charts. I have to skinny it down because I'm showing my black charts right beside it. So, but let's just look at the overall J signal, how it works. This is Russell 2000 yesterday. We had 4 back-to-back huge trades on the Russell 2000. They were all market profile driven too. Every single one had market profile overlapping it. If you look at the first one at 7 o'clock this morning, 7:15, you had a red triangle that posted. What do? I look to sell black. Retraced. There's my sell divergence. Actually had a red dot at the time also. Okay. There was the first sell. Then I had a blue triangle. Retrace. LVA was down here also. And then I also got a blue Fibonacci dot with the yellow dot right here that gave me the exact low on my black line. Caught the huge move. That's 1160 all the way as a 100-tick trade just here alone. That happened at 9:40 in the morning. That's when the EMD also took off also. If you look here, I had a blue triangle, I had a red triangle, no Fibonacci dot, no divergence, so that's not a trade. Then it comes back down, blue triangle. When you know it, stops exactly on my black line, exactly like I did here before. Caught the exact low, 65, and look how it rebounded. Came to the black line again, give me another blue dot, Fibonacci. Look how they all work. Then trend change. Time of day trade, 1:30 to 2:30, I get a red triangle, sell black, calls the exact high of the market. It caught 1, 2, 3, 4 huge inflection points, all by using one J signal chart. That's it. 4 big inflection points. And it works on all markets like this. Okay? So this is a 3-sim ratio. You can have a large time frame, which is my 5-sim up. You have a 3-sim right beside it. It's a really good way to do it, having a 5 and a 3 beside each other. But you can see how dynamic this is. If you have it on your own charts, obviously it's a little harder to see when I show it on Wednesdays and Thursdays because it is smaller because I put it in beside my black charts on number 1 and number 3 trades off volume and price profile. But it's really easy when you blow the chart up. You can see this morning we had 2 trades this morning so far on gold. That's a qualified market profile setup with the black line because the moving averages were down. That's a sell setup. So we had a sell setup here so far and we had a buy setup here so far, 2 qualified trades. After the blue or red triangle, I would look for the first retracement. There's your red triangle. There's your first retracement. There's your blue triangle. There's your first retracement. Those are the best trades, the first retracement trades with overall trend direction. All right? So that's how we do J signal. Now I have a lot of videos on this. We'll have a conference call with this also tonight to go over it again. Conference call is at 5 o'clock tonight. Just get the password with Gerald. It's a standalone system. Since I have market profile with it already on your own Ninja charts and also the J signal, my black line in the sand to keep your limited risk on your trades and also confluence on your retracements. Everything's included on one chart. So it's a standalone system. You do not need my black charts over here to trade all markets. It works on all Forex. I got it trading live on Forex right now. I've got it on my 24-hour charts. It works on all Forex. It works on all futures. It works on all stocks. Doesn't matter. It's the same exact setup. We got the 5-minute trend filter built in. We got the market profile built in. And we have the black line of sand or the J signal built in with the Fibonacci dots. So all we're really doing is looking for retracements with overall trend setup. You break out of HVA, you look for a retest of HVA to go long. You break below LVA, you look for a retest of LVA to go short. It's that simple. The black line shows you the volatility of the market, and when you come down to it on the first retracement, it's a great spot to go long or short with limited risk.